All right, what is up, guys? I'm going to be teaching you guys how to hit high precision entries that will always win. And this is a very, very simple theory. It's called distribution theory. We're going to be going over it all right now. It's hella simple, and it essentially always wins. Like if we go check, well, I haven't been day trading recently a lot, but 100% win rate. 45 bands, but that's 11 trades. Obviously, overall, I probably have about like 87% win rate according to my last journals. So it's not like, but this is across 11 trades. And furthermore, I have a lot of members who've been getting payouts. Like, congratulations to Mo for getting payout. Congratulations to Lucifer, two most recent guys got payouts. And a lot more people have been getting funded using this. So, yeah, and I'm talking about inside the Discord. But I'm just going to be going over this really quick. So, how to hit high precision entries that will always win. It's a very, very simple thing. Every market cycle is engineered through a sequence of accumulation, manipulation, and distribution. The goal isn't randomness, it's efficiency. So the core premise of this entire thing is distribution theory explains how liquidity, time, narrative synchronize to create a directional moves in the market. It merges ICT concepts, smart money logic, and order flow into one unified model for identifying high probability distribution events. Damn. So, quick framework overwork. These are everything that you're going to need to understand. You guys could write this down if you really want. News drivers, order flow, ICT macro times, AMD cycle, displacement, and SMC rebalance zones. So first thing, for news drivers, I personally use Forex Factory. I post all my which days are going to be high and low prob in the Discord. If you aren't in it yet, you should probably join up. But if you're not planning to because you're a loser, you could you could use Forex Factory. And then it tells you news provides the narrative institutions use to justify liquidity grabs, right? Because news is what literally like it's like a public thing. Everyone looks at it. Institutions may answer off of it. Like if some major news comes out, then they'll answer off of it. And yeah, size up when a clear driver aligns with your directional bias. So if you have seen a whole bunch of liquidity and you think market's gonna go down, you think market's gonna go up, you want to check news. If it's aligning up with everything, then you probably have a high prob day. Size down in low probability or choppy conditions, or don't even trade at all. Like honestly, I say just avoid. Like there was a bank holiday, it was literally yesterday actually. I was like just avoid it fully. When there's a news driver, expect one-sided momentum and movement. The market distributes efficiency towards a target liquidity pool. So, for order flow, I I track order flow using 9 and 21 EMA. It's the only indicator that I use. It's very efficient. It's like another confluence. I could confirm it using breaker structures for market intent, and I align the 15-minute, 5-minute, and 1-minute charts for multi time frame flow. True order flow exists when all time frames are Dude, what is up with me in reading right now? Like, sync synchronized and displacement confirms it. I literally wrote this. Actually, no, I used AI for a lot of it. But yeah. And then another thing I use is ICT macro times. This is the only time that I answer. The two key windows of institutional activity, New York time, is 9:40 to 10:10 a.m. This is the morning kill zone, right? It's the initial move after manipulation during London, and it's the first hour of New York open. It's going to be where most of the liquidity is. And this is the afternoon kill zone. It's either where the market continues or reverses sometimes. These are the moments where the market transitions from accumulation, manipulation, distribution with real intent. Now, AMD model. So I believe that Asia's accumulation, London's manipulation, and New York's distribution. This is how I find everything. So, literally explains all right here. Asia's range building, liquidity setup, liquidity sweep, fake out, trap traders, New York, the true directional move unfolds. And to top everything off with everything I just explained, I use displacement. Displacement is defined as price moving with speed and efficiency after a liquidity event. It's literally the number one thing. I only target 20 to 30 points per trade, and it's so efficient because when market moves with speed and efficiency, it guarantees you 20, 30 points, and it's even better on a high prob day. That's how so many people in the Discord have been getting payouts. How I've literally ran it the fuck up at just the age of 17, and you could run it up as well if you just follow everything that I'm fucking telling you right now. It's very fucking simple. So it signals institutional commitment the market is distributing. It's ideal for scaling in or confirming your bias. Okay. So SMT rebalance zones. This is just a whole bunch of confluences that I use. I use more obviously to help me understand where I'm gonna find liquidity. So yeah, and I could go deeper, like engineering liquidity and a whole bunch of other things that are probably in my Notion, but I'm just gonna go over simply what I just did right now. So first off, okay, so let's go. Let's look for 9:40. Okay, 9:40. There you go. Wednesday. This is today. This is today. So, how about we choose a random day so you guys can see. Okay. Tuesday, bank holiday. We'll go to last Thursday. Okay. Perfect. So, morning Thursday. I think this Thursday was high prob as well. This is literally ideally what you want to look for. 9 and 21 EMA are lined up, synchronized. First thing I like to do is honestly, I want to see if market has engineered any liquidity. I'm literally just dropping sauce right now for no fucking reason. So in this case, we're talking about Thursday. Let me just, I was going over a lesson in my Discord and all this shit is still here. For potential links, okay. So where is it? Alright, so yeah, okay. So right here, okay, we can obviously see that the market did engineer some liquidity. So we rejected off a 1 hour gap right here, and there's actually PXH right here too. Market rejected it once, rejected it twice, probably higher time frame, and then we tapped into another fair value gap right here, and that's where market started pushing towards the downside after manipulated, because what happened? Right here we have accumulation, quick accumulation, manipulation above these highs into this fair value gap, and then we started distributing below these lows. This is Thursday, November 6th. What is it? Okay. So now let's hop on the 15-minute. November 6th. Okay, so now we have these all marked out. Now we can find where more liquidity is. Okay, so we have a whole bunch of trapped liquidity here. Let me mark this off. This is how I would go about finding my daily buys. So right here, market taps into what? Consequent encroachment of that range. About consequent encroachment of that entire range. And then we start distributing towards the downside. Okay. We'll mark out the range. Okay, so yeah, market bounced off consequent encroachment twice before it displaced down, beating the 1. Okay, so this is our essential loop. Actually, hold on, we can mark all the way down here. It's a lot more accurate. Okay, there you go. So market rejected 0.786 zone. We don't have to set up any standard deviation. Actually, standard deviation set up. That's towards the side. Okay, so now we can hop on the 5-minute. Take a further look at it. Yep, market's respecting all the zones. 7.786. This is the power of the fib retracement tool. Literally, it's crazy. Okay, so right here, perfect. All right, we don't have to worry about anything because our next drawn liquidity is all the way down here. So on the 1 minute. Okay, so we've identified that there is true kill zone liquidity up here. Now we're distributing towards the downside. This is a high prob day, assuming. So order flow has been pushing through order flow. So what do? We have a whole bunch of liquidity here as well. Market tapped into it, swept liquidity. We distributed towards the downside. Took out this inverse fair value gap. Right after it took out this inverse fair value gap with speed and efficiency, you could have literally took a sweet trade because you have clear drawn liquidity here. It's very, very easy. Could have literally been a free trade. 20, 30 points, 30 points there. Stop loss at consequent encroachment of these highs. Very, very easy. Very, very simple. It's negative RR. You could have just targeted right here. It's been a lot better, honestly. Just really right where the range is. And yeah, it's very, very simple. The strategy always plays out. And you see how after speed and efficiency, where displacement happens, it literally runs towards your TP. And the reason why this happens is it's very, very simple. It's literally just simply because market is pushing towards the downside. We have a lot of liquidity up here. Or overall order flow is literally fucking clear. We're trading between the macro 940 and 1010. Okay, we take out these highs, we push down, and it's simple as fuck. It literally does not get easier than that. It genuinely does not. And you have it set up every single day using this model. Even on low prob days, you're gonna be a lot more reactive with these zones, and you're gonna have to probably find liquidity on the lower time frames, like turtle soup models and a whole bunch of other shit. But it's very, very easy. Everyone's been fucking running it up using this shit. So yeah, if you guys want my full model in depth, I'll have it in the bio. And yeah, you guys can also just join the Discord. I have all my lectures on there and shit, and active community. Good shit to everyone. All the payouts going crazy. All the funds have been going crazy. Keep it the fuck up. Everyone's about to run it up this fucking quarter four. Peace out, guys.